We're going to talk about inflation. What is it? What happens when inflation goes up? And how does it affect your net worth? And what type of investments could people consider in times of rising inflation? When I say inflation, let's just talk about the general rise in prices. When you start to see consumer staples, you start to see milk and soap and shampoo and clothing, and you start to see a general rise in everything. You go to the supermarket and you spend $100 and you're like, wow, I didn't even get that much stuff. I feel like I'm getting less and less stuff at the supermarket. It now costs me like $50 to fill up my tank of gas for my car. That's inflation. It's like high blood pressure, the silent killer for your money, because it's usually incipient. It's usually gradual. You usually don't notice it that much, and it's kind of tolerable until one day the damage is done and the dollar has gotten so weak and it can't buy a lot of stuff like it used to. So that's how I define inflation. Let's talk about inflation and what that does. Basically, your money just doesn't go as far. And if you don't own assets like stocks and real estate, you're really screwed, because now you have no way to make up the difference between paying more for everything. Because if you're paying more for things, at least you own other assets that are going up in price. So what we need to do is figure out where you could invest based on inflation. Let's start by taking a look at gold. There's a funny thing going on with gold, where gold has always been the inflation hedge that you go to first. So when you see gold going up, that means there's inflation. But it seems like there's a replacement, and that replacement for gold seems to be Bitcoin at the moment. I say at the moment because I don't know how long this is going to last, and Bitcoin is a very new phenomenon. Gold has been around for thousands of years. But people are looking to own something as a hedge against inflation that has a limited supply, a finite amount that people believe has value, and that could be exchanged for other things or services of value. So I think a lot of gold bugs who would be betting on gold for inflation are actually swapping into Bitcoin. But gold is typically something you want to own, and gold miners when there's inflation. The next thing is TIP. This is one ETF. It's probably the biggest TIPS ETF. TIP stands for Treasury Inflation Protected Securities. And I think these are better in IRAs, but basically what they do is they pay a little bit of interest, but the price is adjusted to keep your money level when inflation rises. And when that happens, it does create a small taxable event, which is why a lot of people like to own these tax sheltered accounts. The next one is FLOT. This is another ETF, but these are good proxies for the asset class. But floating rate bonds are bonds that basically track a certain interest rate when interest rates go higher. So these will continue to pay you. And then there's real estate. Now, real estate has had a big problem basically because of commercial real estate and because of the pandemic and empty office buildings, things like that. But if you believe inflation is coming, that is typically historically a place to be as a hedge against inflation. And then there's energy. So oil is going up because the economy is reopening. And as the economy reopens, more people are traveling, more people are flying, more people are driving, more fossil fuels are being used up. So those are typically your hedges against inflation.